Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Cailey Barker, who's an experienced analyst and portfolio manager who started his career as a geologist, getting experience in the field before moving into senior position with the likes of Numis Securities and then more recently Blackrock as a director and portfolio manager. Cailey's an active listener to the podcast and he wanted to come on and speak about his insights to the gold market, the current state and outlook of mining, his investment thesis in the industry and how Trump's tariff wars look to affect our industry and a lot more. I want to give a shout out to our sponsors, Hawcroft, who are leaders in property risk management in the mining industry since 1992. They offer insurance risk surveys, construction risk reviews, asset critical assessments, and more. Working across 600 sites globally, Hawcroft supports mining, processing, smelting, power, refining, ports, and rail operations. So if you're looking for any property or insurance risk management services within the mining industry, then please visit their website at www.hawcroft.com. All the details are in the show notes. Cailey, welcome to the podcast. How are you doing?
Thanks very much, Rob. Pleasure to be here. Doing well, thanks.
Yeah, thank you for agreeing to come on the show. You're an active listener, so you've listened to obviously quite a few of these shows before. So yeah, as we always start these off, I just wondering you just tell us a little bit about yourself, about your career, how you got into the mining industry to sort of up to present day.
Yeah, thanks, Rob. Yeah, I mean, I'm a geologist by trade, and having gone through a geology degree at Southampton, the Royal School of Mines at Imperial College, I flung myself into the field as an exploration geologist in Tanzania. So working on the gold fields, Gator and setting up Golden Pride that's run by Resolute now. In the sort of late 90s, I guess, when the industry pretty much cracked out, I came back to the UK after having gone to Japan for a few years, just as an interest in my martial arts. And then came back to the UK and I got a job at Brook Hunt, which is now Wood Mac, and started my sort of analytical career, I guess. I did that for a few years, doing all the mine analysis. Then I joined the city, firstly on the sales side. Worked for a range of brokers, sort of big and small, so very boutique shops right up to Royal Bank of Canada, Numis Securities. And then the last decade I was at Blackrock, where I came as an analyst, but I was managing money by the end, as a portfolio manager in the mining team in London. So looking at running a lot of money, looking at a range of different investments, and also heavily involved with lots of the other things Blackrock was doing, like, I was head of research and I was running a mining group globally, so I was head of that, and a whole pile of other things. And I guess on the side, I've always had a sort of an entrepreneurial bent, so I've always sort of run companies and small businesses, martial arts, all that kind of stuff. So I've always led a very active and thorough and full lifestyle, I guess.
Obviously, you mentioned you're a keen martial artist. How's that influenced your career and obviously helps you shape your mining career through obviously practicing martial arts?
Yeah, a lot, I would say. I mean, I started as a kid, on the tail end of the Bruce Lee craze in the 80s, when everybody was sort of flying around playgrounds trying to mimic flying kicks and stuff. So that's how I got into it. But I just never stopped. Like most people, like every other gym bunny, they go for 3 months and then they sort of stop. I just carried on going. So, I mean, I've done it for 40 years now on a range of martial arts. And I mean, the main thing is discipline, I guess, discipline and resilience. You just, to have that sort of focus, attention to detail, and whatever situation you're in, however bad or stressful a situation is, you can always sort of relate back to the fact that it's not as bad as being in a ring with a 18-stone monster trying to take your head off. So it gives you a very sort of calm, easy perspective on life, that's carried me in everything I've done, and I've enjoyed the fact that I can always relate to that whenever I get into times of strife or stressful situations. And it's been with me my whole life. So even though I'm sort of semi-retired now, I sadly broke my body after I'd formed and run my own martial arts and taught at a couple of clubs. It still stays with me, and I still try and pretend I do it at times as much as possible.
And I take it you're a black belt as well.
Well, I've got 5 actually.
Okay.
So yes, I mean the one I did the most of was a Japanese style called Shrinji Kempo, which I got a 5th degree black belt in. I did that for 25 years, but I enjoyed the variety of training in everything from like Muay Thai, kickboxing to Brazilian Jiu-Jitsu, cage fighting, and Jeet Kune Do, which is Bruce Lee style. Everything. There's so much to learn in the martial arts world, and I think more and more people are realizing how good it is for health, longevity, and mental discipline.
If we, and we're going to speak about mining now. So if we look at obviously the mining globally compared to other industries, why is there not as much interest in mining, with the exception of obviously a few countries like Australia? Why do you think other people are looking at other industries and not mining?
Yeah, well, I guess you mentioned Australia. That's obviously very parochial, and the resource industry, generally speaking, is part and parcel of their existence. I guess that's such a big part of their economy and so forth. The rest of the world is less so. Maybe Canada is still relatively important. But in answer to your question, I guess there's a number of reasons. I suppose the first and foremost is the sins of the past. I suppose, and that I've seen that trend over the last 30 years. That boom and bust cycles come and go. Investors come in and come out, particularly on the generalist side, and they've always sort of suffered by the cyclicality of the mining sector, but also the poor discipline of mining companies in the past to try and counteract that discipline. I think that's improved massively, and I think companies now are in better shape than they've ever been. Balance sheets are very robust. They have very clear strategies. They're very focused on shareholder returns. But on the flip side, there's been increasing barriers to development. It's become geopolitics has become on the front of everybody's mind. There's increased regulations. There's increased capital required to develop projects. So those are sort of the main things, I guess. And then on the side of that, also, public perception, I don't think has gone away. And things have got a lot better with the sort of critical minerals, energy transition thematics coming through. But at the end of the day, the majority of people still see us as a relatively dirty sector, and I think that's always going to be the case, because that's what the sector does. That's what we all do. And then I guess finally, and this always happens, but we've seen this massive shift in capital to other sectors. If you take Canada as an example, they move. A lot of the speculators would play in and dabble in exploration stocks, and they've moved across different sectors to cannabis and Bitcoin and AI, and now it's all about tech. And the Magnificent Seven is just dominating the market for most generalist investors. I mean, if you add up the whole mining sector, I don't know what it's worth, $1.5 to $2 trillion maybe, and Nvidia's $3.5 trillion. So you could sell Nvidia and buy the whole mining, probably oil and gas and utilities as well. It's only mining's only 3% of the MSCI World Index, so it's tiny in the most generalist investors' minds.
Where would you say we are in the mining life cycle?
Yeah, well, I mean, at a very, very interesting point, I think, to put it succinctly, because the opportunity set is incredibly compelling, with the energy transition, and the shift to a sort of greener world. So we've had this massive structural change in the market. So I don't think mining is as cyclical as it has been in the past, and I don't see it sort of returning to those lows that we've seen. So the opportunity is great, and we're only really at the relatively early stages of that structural shift. So it's by far got more room to run, I suspect. But the challenge is it's a very confusing picture of how we're going to get there, and I don't think, and we're all sort of working it out and making it up as we go along. It's very, very tough to know how we're going to get to this net zero or green world, and how mining is going to be an integral part of that. And then, of course, you've got all the complexities of all the different commodities within the mining sector.
Obviously, you've just been mentioning obviously the energy transition, and obviously you look at copper, you look at lithium, and a lot of people obviously speak about these topics, and I suppose they are hot topics in our industry at the moment. But you don't hear much about, or as much around gold. So do you think there's no longer any interest in gold within the sort of investment community?
Yeah, it's very odd, isn't it, given how the gold price is flying to all-time highs. But I think, most people consider gold, there's gold and there's gold equities. And I think, when you look at gold as a commodity, I mean, the fundamentals behind it is what has driven the gold to the new highs. And, it remains a sort of key hedge against inflation, geopolitical uncertainty, and that sort of safe haven investment. But we've had this sort of very tough year last year, lots of general elections, lots of geopolitical changes, lots of macroeconomic concerns, all sort of compounding to drive gold upwards. I think people have sort of been worried a little bit about where the economy goes, the direction of interest rates, and obviously I think people are under no illusion now that inflation is proving stickier, and now high interest rates, which have a reverse correlation to gold, should come down, but perhaps not as quickly as what a lot of pundits have previously hoped. So that's sort of been dampening demand somewhat. On the physical side, central banks continue to accumulate gold, and that's just very positive. I see that continuing to happen, signaling long-term confidence in the commodity and less confidence in the sort of macroeconomic backdrop. I think that that's so the fundamentals for the commodity look pretty good to me. I mean, we'll have to wait and see what happens with Trump and the US dollar and all that. On the equity side, which is probably perhaps more relevant, that interest has waned, and it has become a more difficult space to invest in. And it's a combination of factors from liquidity to size, and also, as I mentioned earlier, sort of the retail community sort of moving to sort of sexier sectors, even within mining, whether it's lithium or copper, away from this, gold equities.
I know you love Japan, and you've recently taken an advisory role with Japan Gold. How does that fit in with your gold thesis?
Well, positively. I've always been I worked in the gold fields, and so I've always, gold is always going to be very close to my heart. And I guess Japan Gold is a sort of perfect combination of both in many regards, because it's a perfect storm of three things for me. One is exploration, which plays into my geological curiosity. It's Japan, which I love. I've got close links to through martial arts and my family, and it's also gold. So it's great on all three counts. I mean, when I was at Blackrock, I was always looking for sort of new frontiers as investments, and I've invested in Ecuador and Colombia, and somewhere that's exciting and new, nascent. Maybe the politics are a little bit tricky, or the geology is a little bit tricky, or something that makes it a bit off the radar for most generalists in the space. Whereas Japan, it went through its moratorium on the mineral exploration. So there's nothing happened since after the Second World War. And there's only one operating gold mine there, Hishikari, which is very, very well known in academic circles because it's pretty much the highest grade gold mine in the world, running about an ounce per ton, so like 30, 40 grams a ton. So, the Japanese basically explored over a period of time, very surface. And once you hit below surface, sort of areas of a few hundred meters, which is where Hishikari is, there's a complete underexplored epithermal potential for gold there. And you only if you hit something that's as high grade, even half the grade of Hishikari, the economics of these deposits can be massive. So it doesn't it lends itself to something that's very attractive. You're not looking for a sort of million ounces in Canada, a gram per ton. This is very high grade. The smelters in country need silica flux. So Hishikari, they basically Sumitomo Metals Mining truck the whole ore to their smelter and use the silica as flux, and then the gold basically pays for that. So if you can find something similar where you basically don't need to build a processing plant, you have all these sort of ESG considerations become a lot lower, and the economics change dramatically. So the kind of thing Japan Gold is looking for could be small in sort of geological terms, but actually in economic terms, it could be potentially world class. And I guess that's why it attracted me to the company. I invested in it when I was at Blackrock, so I've got a long outstanding relationship with them, and it was a pleasure to come on board and help advise them on corporate strategy and how we can sort of move the company forward to the next stage.
Yeah. Apart from gold, is there any other commodities that can be found in Japan?
There isn't a lot. There's some base metal potential, but very nascent. So there's not really been. There was a copper mine, which is now a museum, pretty much, which exists. There's been a very little bit of copper, and so some critical metals, but are very, very small. But quite bizarrely, very, very little mineral potential, broadly speaking. So it's mainly gold and perhaps the base metals.
Do investors appreciate the immense complexities of obviously challenges of running a mining company? And obviously you've dealt with quite a few over your time.
Yeah, I guess most investors want to have their cake and eat it, right? And I've been fortunate enough that I've worked on both sides of the table, so I can appreciate exactly what miners have to go through. I think there's plenty of investors out there, particularly generalists, that have never been to a mine in their life and have no understanding at all of just how hard it is to run a mining company. And you can sort of beat a company up for not hitting its targets, but to realize that everything goes into those targets, everything from grade, tonnage, mining rates, dilution, ripping, all the elements of cost, resourcing, geopolitics, permit, the list goes on and on and on. And in the backdrop of that, you've had, ever since COVID, you've had this enormous shift in the industry generally. And that's put a lot of pressure and a lot more challenges, a lot more regulations on mining companies. So I would think I was always, as an investor, I was always cognizant of that and sympathetic. Obviously, if a company keeps missing its guidance and keeps under delivering, then there's something wrong, and it might be just a communication issue between executive management and people on the ground, and the operations might need to be rebased and expectations lowered. So I think getting that communication between investors, like this is what, and the mining community, that can always be improved. And I think generally most investors, particularly generalists, they tend to focus on a very high level. They look at the commodities, and mainly the prices and where they are in the cycle. They kind of ignore the operational challenges as much, particularly as they're so complex. If they don't have some kind of mining or technical background, it becomes very difficult to kind of understand the nuances of a mining operation. And plus, I just guess the investment communities just become more and more short-term focused, and even the long only funds, which is what I was working for. It became more and more about quarterly results, and it's just, but you can't run a mining company on a quarterly basis. These things have very long cycle times. They're very capital intensive. So to be an investor, you need to be incredibly patient, and that doesn't often, align between the sort of long-term objectives of a company and the short-term objectives of an investor.
ESG. We don't seem to hear as much around ESG as we did before, and obviously seems to play a lesser part or an afterthought in many conversations, possibly you've had and even myself. Is this no longer relevant to investors?
Yeah, it's funny how these things come and go, don't they? Isn't it? I mean, it's. When ESG became very topical, and my former shop was a very, very big spearhead of that rhetoric, I guess. A lot of the mining community sort of potentially laughed because it was, well, we've always done this. We called it CSR, but we've always done this in the background to some degree. I suppose the difference is now, you have to be judged on it, which is right. Companies need KPIs to work to. Net zero sort of become a thing, and how you can't just, I guess, greenwash and say, we're going to achieve net zero or 30% GHG emission reductions without actually a sensible and robust plan behind it. It remains crucial, I think, ESG, and I don't think that's gone away. I think it's not so apparent in the forefront of as people's minds as it was. I think the investment community was always slightly worried that there wouldn't be a clear differentiation in returns from investing in good ESG type companies and normal type companies, and I guess that's also played into people's minds. So I wouldn't say it's gone away. It's just sort of become a standard rather than a massive differentiator. I think because of that, it's been embedded. It's kind of the noise has kind of done its work, and companies have pulled their socks up and met a lot of the requirements that investors were very vocal about. I think that it will still be there. Stewardship teams, compliance teams, and the investment community will still be checking those metrics. I think it's still got a long way to go to make sure those metrics are standardized, clear and easy for investors to understand and comprehend. And I think that just needs continued dialogue again between the investment and mining communities.
Now, obviously, Trump's back in the US administration, and there seems to be obviously a lot of, as we're recording this, a lot of tariff wars going on. How do you think that's going to affect our mining industry, obviously on a global basis?
Yeah, probably not so well. I'm not sure Trump 2.0 is going to be particularly good for our sector or a lot of sectors, broadly speaking, with the obvious exception that it will potentially benefit the US in the long run. I mean, all these renewed tariffs, they're going to add a lot of pressure to already what can be already tight margins for a lot of mining companies. There's the potential to disrupt global mining and metal supply chains. So is another complexity. And companies and commodity traders having to sort of rethink their business to make sure they're sort of future-proofed, or at least able to encapsulate what could be higher cost, higher tariffs. So I've got sympathy with it. Everybody wants companies want protectionism. They want to protect their domestic producers and their domestic industries. But it's obviously going to hurt global diversification, which we kind of push very hard on. Not just in the mining sector, but in a lot of sectors. on the critical mineral space, I guess that's going to be positive for the US. And hopefully the permitting and regulatory burdens that have been very apparent in the US. You only have to look at some of the mines there that have been around forever and never been able to get up and running. So that hopefully those could be streamlined, which I think would be good. That would help, potentially cure the demand gap that's sort of coming in, particularly in copper in future years. I guess the big uncertainty is really, the dollar. How does the dollar react to all of this? Is it going to be strong, which is not so great for commodities? What's going to happen to inflation? If the US increases its domestic industries, that's obviously going to add a lot of inflation and hurt the consumers directly, which I don't think, well, I'm sure some of the voting public realise, but, if people are going to sort of have to pay, I don't know, double the price for their iPhone, is that going to help the industry? I don't know. Watch this space, I think is the short answer.
Obviously, you've invested in a number of companies, either by yourself or via Blackrock. Why is it really hard for, I suppose, junior miners to get finance these days? Why is it difficult, and how do you see it playing out?
Yeah, it's a question I get asked a lot, actually, and I guess there's been a dearth of mining investment over the last decade, I suppose, which we've just seen this sort of waning trend that's happened, and the risk-averse capital markets have just sort of moved to favour large cap established producers mainly. That's partly due to liquidity within funds. You need a certain liquidity, and we saw that trend when I was at Blackrock. Entirely, when you own 15% of a small cap company, you can't get out. So you need to be able to trade it. If you don't have the liquidity, it flags up on the risk management teams that look at your portfolios, and you get told to reduce your position size. So, what you don't want is to be stuck with a load of illiquid investments in your fund. So that's meant, particularly in the gold sector, that's meant it's a lot more challenging to own junior mining companies. So junior companies have had to look elsewhere beyond institutional investors for pools of capital, and whether that's private equity or private credit or the big caps themselves as sort of they've become funders of lots of exploration companies as well. And I think that trend is only going to continue. Sadly, I think it's going to continue to be hard for junior companies to get funded, particularly at the exploration side, and that might drive more M&A. We keep seeing more and more M&A, and in the past, if people had asked me, is bigger better? I'd have always said no. Value over volume. We've heard those catchphrases. Of course, they're absolutely right, but actually, these days, bigger is better. And if you can add a bit more scale to your company, even if the synergies aren't quite so great, you might attract a larger pool of investors to your shareholder register.
Mining shares seem relatively cheap at the moment, and I suppose if you look at that historically, they are. And if you look at other industries and other sectors, why is that?
Yeah, that's a great question, Rob. I mean, there's a lot of nuance within that, and I wouldn't say all mining shares are cheap. If you look, the diversifieds, the big guys, they're probably at a par, probably a bit below par historically, I guess, and that's due to a combination of sort of mixed fortunes of the past, less generalist investors, kind of mixed strategies. We had sort of them nibbling at each other, that always adds uncertainty. People get a bit concerned, like what are you trying to achieve here? And then iron ore, I guess, particularly Rio Tinto, BHP, the likes, a lot of their revenue base is iron ore, and people have been worried about the iron ore sector. It's actually been, I think, remarkably resilient compared to what expectations are. But I think that's also all of that has added sort of uncertainty. So the diversifieds have looked marginally cheap. I think it's mainly on the gold sector that shares look incredibly cheap. And in the heyday, if I think back to sort of mid 2000s, you could buy Goldcorp used to trade on like 3 times NAV. At its peak, that was the most expensive gold stock at the most expensive time, and now the sector's sort of trading at 1 to 1.5 times at best. Some of them are even trading below NAV. Sadly, I don't think those premiums are going to come back. I mean, I always had a job when I was an analyst. I always had a job justifying those premiums to your average generalist investor. I was sort of saying, well, why is it on 3 times? And it's a combination of things. It's gold is worth as much as it is in the ground as it is out of the ground, minus the cost of extraction. So it's got a sort of premium that comes with it. Gold mines tend to also have a shorter life, like 7 to 10 years, and that's never the case. They always go on longer than the feasibility study that usually finance them. So there's a sort of premium baked into that exploration success. But I think a lot of it was driven by investment sentiment and just buying demand, right? So I think that's probably gone away, and I don't think the premium's coming back. It's easier to kind of sell the sector from a valuation perspective, but that makes it very hard to try and marry like why are shares so cheap? We should be far more expensive. I think probably the gold sector is going to remain cheap for quite a while until there's a massive pool of capital comes in, and if gold equities become massively attractive, which they might, if this gold price keeps going up, there'll be a rotation into gold equities, and that will drive ratings. And then I guess just finally, the place where it isn't so cheap is copper. Now we see a premium in copper equities, which we never had before. Traditionally, it was the other way around. Copper equities would always trade below, and now we're seeing premiums up to sort of 1.5 times. I think that's probably going to continue, and actually could even go the other way and get more premium into copper because of the scarcity factor. So it's a sort of very interesting dynamic that shares are very cheap and gold probably quite expensive in copper, and then the rest are sort of somewhere in the middle.
And lastly, and I suppose it's a bit more of a generic question, how do you see the mining industry sort of grow? And also, I suppose, looking at it from an investment perspective, how do you think mining will be, where will we be in, say, 3 to 5 years' time?
Well, hopefully higher up. That's a great question. The crystal ball is tricky. I think, and I don't see a dramatic shift. I wish I did. I've always been a bit more of a conservative guy rather than a natural bull of the sector, which is quite rare for someone who's been in it for so long. But I guess I've just seen too many cycles, for better or worse. I do think the sector keeps grinding higher, and I think that's a combination of driven by the energy transition, critical metals. I think gold is going to continue to be a commodity that people gravitate to. I don't see a massive change. I just see that as a sort of the structural base of the sector continuing to push commodity prices higher. I think the challenge is, can companies try to keep their discipline and try to keep delivery, and make sure that they're delivering on their promises. The best companies are those that can have a clear message of their strategy, constantly deliver. So the best best in class companies, I don't know, like in gold it might be Agnico, seem to always sort of under promise and over deliver, and or not always deliberately, but just by virtue of the way they run their business. And so if that can continue, and then I guess the shareholder returns, again, I keep quoting Agnico, but Agnico talk about per share basis. But lots of companies now are buying back their shares, and if they've got a consistent strategy of buying back their shares, that helps support the share price and helps it aggress upwards, particularly if they've got growth and free cash flow to put to work. So I think a sort of combination of those things should attract more generalist part of the investment community to our industry. And the hope is the messaging gets better. That's what I think where the weakness has been in the past. We're still seen as a bit of a stuffy industry. Mining is still a bit of a dirty word. And if we can sort of improve that, the critical minerals goes a long way. Try and get a sort of younger, more energetic, entrepreneurial backdrop of new investors and new interested people into the industry, then perhaps that's what, with the technology coming in and AI behind it, that's perhaps where the sector will flourish.
Cailey, thank you very much for your time. Thank you for sharing us your journey, your investment thesis, and your obviously experiences within the mining industry. If our audience wants to sort of reach out to you, if they want to follow anything that you're up to, how can they go about doing that, and what social media platform channels are you on?
Yeah, thanks, Rob. Well, you can check out me personal and professional stuff on caileybarker.com. It's more of a personal website. I run a longevity blog, which I talk about sort of life and longevity and health on that, some of my creative writing exploits. But also it's got some of my mining investment stuff on there. So you can check that out, or LinkedIn. If you want to get hold of me, you can always message me on LinkedIn. I'm pretty active on that.
Yeah, we'll include those in the show notes to accompany this for easy access. So hopefully our audience will reach out to you.
Brilliant. Well, thanks very much, Rob. It's been a pleasure. Lovely to be here.
Yeah, no, thank you as well. Thank you for listening. Hope you enjoyed that episode. As always, appreciate your continued support. Please keep sharing these episodes far and wide. There's obviously a lot to unpack here in this episode, and quite a few different topics as well. So please can you share this far and wide, share it with people within our industry, but also people outside of our industry as well, because it wasn't necessarily particular focus on a particular company. So it could appeal to a wider audience. So thank you for listening. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.